If you have ever entered a trade thinking that the trend would continue only for price to reverse sharply against you, then chances are that you confused BOS, a break of structure, with a CHOCH, which is change of character. These two concepts look similar on the chart, but they mean completely different things. In this video, I will explain the difference between a break of structure and a change of character in very simple terms, and also teach you how to identify them like a pro, even if you are still a beginner. Now let's get into this video. Before understanding what BOS and CHOCH is, okay, what a break of structure and change of character is, you first need to understand market structure. This is very important. You first need to understand how price moves, the movement of price in the market. Now let's quickly look at the market structure. Now, what is market structure? Market structure simply means the way price moves in the market. Now, when you look at your chart, you see price moving in a zigzag manner like this, okay? Right? This is exactly, if it's a bullish trend, right? This is exactly how price moves in the market. These swing points have what names, okay? So you see price makes highs, okay, and lows. It makes highs and lows. So this is how price continues making highs and lows, okay? So this is called market structure. So as price is moving, it makes high and it makes a first high, right? Makes a first high right here, and the next high is higher than, this is the next high, it is higher than the first high, right? So we're going to call this next high higher high, okay? We'll call that next high higher high. Why? Because it is higher than this high, right? And the next one is also called a higher high because it is higher than the previous high. And that is how price is going to continue moving like this. Okay, so it makes higher highs, okay? And over here we call this right here a low, and the next one is going to be a higher low. Why? Because it is higher than the previous low, and the next one is also going to be called a higher lows. So when price moves in the market, it makes higher highs, okay, and higher lows, higher highs and higher lows. So this movement is what we call market structure. This is how price moves in a bullish trade, okay, in a bullish trend. Okay, now if now look at this right here, okay, I have labeled it for easy identification, just like I have explained to you. Okay, so we have the high and then the next, so we have the high right here, and then the next high is going to be called what? Higher high, and it is indicated with HH, that is higher high. Okay, and this is what? A higher low because it is higher than this previous low. Can you see that? So that is it. Just like I've explained, you can see that. Okay, I just labeled it so you understand the key letters that you can use to indicate. So wherever you see on a chart that it is labeled HH, just know they are referring to what? Higher high. And when you see that it is labeled HL, you know they are referring to what? Higher low. This class is beginners class, and that's why I am simplifying it in a way you're going to understand. So we have the higher highs and the higher lows, the higher highs and the higher lows. This is for what? A bullish trend. Okay, you can see it's for a bullish trend when price is heading upward. Now let's look at when price is heading downward, a bearish trend. What are the swing points called? So let's say price made a high after coming from a bullish trend and it had a reversal right here. Okay, so price will start making a lower low and a lower high. Okay, this is called a lower high, and right here it forms a lower low, it forms another what? Lower high. Okay, lower low, lower high, and that's how it continues in a bearish trend, right? Can you say that? Can you see that? So that is how price moves in a bearish trend. So this right here, let me label it. So that right there is called a lower high. Okay, why? Because that high is lower than the previous high. Okay, so that is a lower high. And then we have another lower high. So I'm just going to label them so you see it. Okay, so looking at it, you can see how it's going to be on a downtrend, right? Okay, so we have the lows. It's called a lower low. Okay, so you can see it's all marked out, a higher low and a lower low, because this high is lower than this high. Okay, and this low is lower than this low. That's why it's called lower low and a lower high. So this is exactly how price moves in the market, and this is your market structure. Okay, so once you understand market structure, break of structure and change of character becomes easy for you to understand. Now let's proceed. What is break of structure? Break of structure happens when price breaks a previous swing high, okay, or a previous swing low in the direction of the current trend. Now listen to that exactly. A break of structure happens when price breaks a previous swing high or a previous swing low in the direction of the market. What that means is that if price is currently bullish and is making higher highs and higher lows, okay, so this is a previous swing high here, right? This is a previous swing high right there. Okay, so whenever price breaks that high, okay, whenever price breaks that high, that is a break of structure. It breaks that high towards the same bullish direction, right? You can see it's heading upward. It broke the previous high and made what? A new high, okay? Towards the same what? Bullish direction. Okay, if it's on a downtrend, to break the previous low towards the same downward direction, okay? But this is a bullish example right here. So right here, I would consider here right this at this point as a break of structure, and I'll consider this point as a break of structure. Can you see that? Okay, so that is what I just meant with the simple definition I just gave to you. Okay, so that is what is break of structure. Break of structure simply confirms that price is likely going to continue in the same direction, be it a bullish trend or a bearish trend. So it means price is going to continue, it's likely going to continue towards the same direction, towards the same trend. Okay, now let's look at break of structure in an uptrend. Okay, so just like we have here, so price makes a higher high and a higher low. Okay, it makes a higher high, pulls back, makes a higher high, it pulls back and make what? A higher low. Okay, so this is break of structure in an uptrend. Okay, it's called bullish break of structure. This is called bullish break of structure. So I'm just going to like point out the point at which is considered that structure was broken. Okay, can you see that? Okay, can you see that? So that is bullish break of structure. Now let's look at break of structure in a downtrend. Okay, so talking about break of structure in a downtrend, so price makes lower low, like we have here. Price makes lower low. Okay, this is a lower low. So price makes lower low after price reverses from an uptrend. So after that, it makes what? A lower high, and it pulls back and makes a lower high. Then it comes back and break this level. Once price breaks this level to make another low, it is considered a break of structure. Do you understand? So that is a bearish break of structure, and it confirms that price is likely going to continue in this same downward direction. Okay, and sellers are still in control. So that is a bearish break of structure. So just think of break of structure as a trend continuation confirmation. Okay, it confirms that trend is likely going to continue, and the market is saying I'm still moving in the same what direction. That is just what break of structure does. Okay, so I believe you now understand what break of structure is. So let's look at a live chart example to show points at which price broke structure in the same direction. Okay, so look at price movement right here. Okay, made a lower low, right, and a lower high, a lower low and a lower high. Can you see that? So that was just what I was illustrating, a lower low and a lower high. Okay, and then a lower low. Now when did price break structure? Right here is when price broke this lower low. Can you see that? That is a break of structure, and this low was broken again here, and this low was broken again right here. Can you see that? And this low was also broken again. So those are the points that is regarded as when price has what? Broken the structure. So that is a break of structure in a downtrend. This is what it looks like on your chart when price is moving in a downward movement. Now let's look at a bullish break of structure. Okay, so let's look at this uptrend right here. Let's look at price movement. Okay, so it made a high and a low, and then it made a higher high and then a higher low, a higher high and a higher low. Can you see that? Higher high and a higher low. So, and a high. Now, when exactly the price break structure right here is at this point, okay? Can you see that price broke structure at that point, and it broke structure right here again and again and again. Can you see that? So that is exactly what we were illustrating. That is price movement in the market. Now let's proceed. Now, what is CHOCH? Okay, what is change of character? Okay, change of character happens when price breaks a key structure level against the current trend. Look at that, listen to that, and ensure you take note of that. Against the current trend. The difference between the difference between break of structure and change of character is that the break of structure happens in continuation of the same trend, but the change of character happen against the trend. Okay, so it occurs against the trend. So change of character simply means price is possibly going to reverse. It is the first signals that tells us the price is gonna reverse. Okay, now let me give you an example. So let's say price has been bullish. Okay, price has been bullish, making higher highs and higher lows. Okay, higher highs and higher lows. That is the structure at which price has been following, and suddenly price, instead, it makes a low, right? Price makes a low. Now, instead of making higher high, okay, instead of making higher high, it comes and makes a lower high right here. That means that high is lower than the previous high. It makes it a lower high right there, and then proceeds to break below the last higher low. Can you see that? It proceeds to break below the last higher low. This exact point is when you know that price is going to change direction. Now, look at what I mean. This low right here was the last higher low. Okay, so as soon as price breaks that low downward towards the downside, that is what we call change of character. Okay, so the character has changed from making higher highs and higher lows, and is now making a different structure right here. So that is what we call change of character. Now let me continue the downtrend. Okay, so price makes a lower low and then a lower high. Okay, a lower low and a lower high. So let's say price continues downward like this. So at this very zone right here, when price broke that last, okay, that price broke that last higher low, okay, that is when change of character occurred. So this is called a bearish change of character, okay, and it is the first signs that buyers may be losing control. So this is the first sign that tells you that this bullish trend is weakening and buyers are losing control and sellers are stepping in, pushing price downward, and signals that reversal is likely to occur. Okay, now bullish change of character is the other way around. Let me show you that. So let's say price has been on a downward move and it's been making lower lows and lower highs. Okay, lower lows and lower high, and now it makes a lower high right here. Now instead of coming to continue making a new lower low, it makes what? A higher low. Can you see that? It makes a higher low. That means that low becomes higher than this low, this previous low right here, and reverses to proceed in a bullish trend. Can you see that? So the character has changed. It has changed from the previous character of making a lower low and lower high, and it has changed to making higher highs and higher low. So this very point at which price broke this previous lower high is when the character changed. So that is what we consider as a bullish change of character. Now let's quickly look at these examples I've given on a live chart. Okay, let's look at this movement right here. So you can see that price was previously on a downtrend. Okay, it's making lower highs and lower lows. Can you see that? Lower highs and lower lows. Can you see that? So that is the movement of price on a downtrend. Now let's check what happened right here. There's a high right here, a small high right here. Can you see that? So right here we have a lower low. So price, instead of making another lower high, what happened? It broke upward. It went upward and it broke past this lower high. Can you see that? It broke past that lower high. That is a change of character. Can you see that? That is a change of character. And after that, what happened? It made a higher low and a higher high. So that is change of price. So looking at this chart right now, what is the point at which price changes character is at this very level right here. Okay, it broke the previous lower high. Okay, so it broke the previous lower high. That is the point at which price change character. So this is for a bullish change of character. Now let's look at example, a live chart example of a bearish change of character. Okay, so let's look at this example right here. So you can see initially price was bullish and it was making higher highs and higher lows. Okay, this right here, this low right here was the last higher low, right? Was the last higher low now, and this was the last higher high. And look at what price did. It did not make a new high. Instead, it made what? A lower high. Can you see that this high is lower than this high? Okay, let me mark that again. This high is lower than this high. Okay, so price did not make a new high. Instead, it made a lower high. Okay, that is first sign that price is about to change its character. And to further confirm that, price broke past this higher low right here. It went further and broke downward. Okay, it broke past this higher low there. Can you see that? It broke past it, and that is what we call change of character. That is what we call change of character. It's a sign that the sellers are stepping in into the market and there is possible reversal. Price is going to possibly reverse. Okay, so now let's look at the key difference between a break of structure and a change of character. Okay, let's look at the key difference between the break of structure and the change of character. Now for the break of structure, what do you use to identify it? It shows break of structure. It breaks structure with the trend. Okay, it breaks structure with the trend. That means in the same direction as the trend. Like the example we have here, we have the break of structure marked out in red. Can you see that? That is a break of structure, the price at which price broke structure, and it happened towards the same bullish direction. So break of structure, it breaks structure with the trend. And another key difference is that it shows continuation. It shows continuation. And the next key difference that it confirms strength. That is, it tells you that buyers are still in control. Okay, there's still more powers for buyers pushing price upward. Then the next difference between break of structure and change of character. The break of structure is safe for what? Trend following entries. Want to be trading along with the trend. Break of structure helps you to confirm your entries. Let's look at the key difference of the change of character. So the change of character, it breaks against the current trend. Okay, it breaks structure against the current trend. This is what I mean. Okay, so like we have here, so break of structure happened at this very point where I marked red right there. Can you see that? So price was initially on a bullish direction. Then it broke structure against the bullish direction. Instead, it broke structure towards the downside. So that is one key difference between the change of character and the bullish and the break of structure. So change of character, it breaks structure against the current trend. So another key difference for the change of character is that it shows possible reversal. So once change of character occurs, it signals reversal. The price is possibly going to reverse. It's the next one is that is the first warning sign of weakness. Okay, it shows that buyers are not having enough momentum in the market right now. It is sellers that are what coming in, so it shows weakness of the buyers, okay, or the sellers, depending on the type of change of character. Now another one is that it is great for reversal trade setup. Now if you are the type that takes trade at the point which price it wants to reverse, change of character strategy helps you to confirm that price is about to reverse. Now let's look at how to identify the break of structure and the change of character. And now the first thing is to mark swing highs and swing lows. Okay, mark out swing highs and swing lows. Okay, So ensure you mark out swing highs. Okay, these are swing highs, these are swing lows. Mark them out. Okay, now the next thing is to determine the trend. So when you go to your chart, the first thing to do is to ask, what is the trend? Is it a bullish trend? Is it heading upward, or is it a bearish trend, or is it heading downward? Now looking at this chart, this is what it was, a downward trend, a bearish trend. Now after that, the next thing you have to do is to check the structure, the levels that got broken. Okay, check the levels that got broken, like we have here. It was broken, it was broken, it was broken. Okay, so check for the levels that got broken, and that was also broken. Okay, then after that, wait for what? The next thing is to wait for candle close. Now when you are trading, when you want to identify a break of structure or a change in character, ensure you wait for candle close beyond that level. Okay, the candle should close beyond that level. Do not um take wick. Okay, if it's wick that broke the structure, do not take it as a break of structure or a change of character. Ensure it is a full body candle that closed beyond that zone, beyond that level. Okay, let me show you an example here. Let me show you an example here. Now look at this place. Okay, if you look at this level here where the structure was broken, can you see that it was a large body candlestick? Can you see that it was a large body candlestick that broke the structure, and it closed? Can you see it? The body of the candle closed lower than the that level. Okay, the last low, it closed lower than the last low. Can you see that? And let's look at this place where a change in character occurred right here. Okay, can you see the candle that changed the character right there? It's a long bullish. I'm not saying that it must be this long. Okay, I'm not saying that this must be this long every time, but it should be a full bodied candlestick, not weak. It should not be the weak that is just barely staggering to break that level. So looking at this level, which price change character right there, can you see that it was a full bodied candlestick that closed what beyond this level? Okay, and that is a full confirmation that change of character has occurred and break of structure occurred. Now let's look at common beginners mistakes. So beginners make some mistake in identifying and using break of structure and change of character. Now the first thing is using tiny internal swings. Okay, the first thing is using tiny internal swings. Not every small move is a break of structure, and not every small move is a change of character. Let's look at this, what this means in our chart. Okay, now let's look at this level, this zone right here. Okay, I want to look at this zone right here. We have swing highs right here. Okay, this is a swing high. Can you see that? And we have a swing low and a swing low. Now look at this zone right here. This zone right here, this, there are some little swings right there. There are some little swing highs and swing lows right there. So you don't have to consider that as a major break of structure or a change of character. Okay, so small swings are not to be considered. These are what we call internal swings and internal lows. Okay, internal swing lows and internal swing highs. And even right here, what happened right here, we have internal swing highs and internal swing lows. So it is major swing points that you are to what to mark out to identify. Now let's also look at this zone right here. Okay, we have swing highs. Can you see that? Swing highs, can you see that? And we have lows. Okay, so you have to mark out major swing highs and major swing lows. Now when you look at this place right here, you can see that there are some internal swings. Okay, so there are some internal swings, be it low or high. Can you see that? So that is not what you should consider. You have to look at major ones, mark out major ones. That is what we consider a break of structure. Now looking at this place now, you cannot come here. Look at this place. When you look at this place now, okay, you can see that there is a tiny break of structure. Okay, but you can't mark that out. That is not what you are supposed to use. Instead, you are supposed to come here to this major low, this major swing low, and wait for a break of structure of that low. Now another mistake that beginners makes is ignoring trend direction. Okay, some beginners like to trade against the trend, which is risky. Okay, so ensure that you trade with the trend. You trade with the trend. Now the next one is trading weak breaks. Do not, if it is a week that broke a structure, or a week that confirmed change of character. Do not trade that. Okay, ensure the break of structure or the change of character is confirmed with the close of a full body candlestick. Now let's look at how to use it in real trading scenarios. The break of structure and the change of character can be used in two ways. One is for trend continuation trades. Okay, so when you have a downwards direction, okay, of the price, right, like this, a downward trend like that, okay, the first thing is to identify what the break of structure, that price has actually broken a structure. Okay, now the next thing is to wait for a pullback. This right here is considered as a pullback. Okay, this lower high is considered as a pullback, so you wait for a pullback. So the pullback should not be just pullback to anywhere, it should be pullback to a support or a resistance level. Okay, then you enter right there and take your trade downward. Okay, so how to trade it, let me go over it again. Wait for a break of structure, confirm that there has been a break of structure, then wait for a pullback to a demand or a supply zone, and then you enter in the direction of the trend. Okay, so another way to use the BOS and the choke is for reversal trades. Okay, now how do you use this? Let's look at how to use the change of character for reversal trades. Okay, so the first thing is to confirm that change of character has occurred, like we marked out right here, that change of character has occurred. So after you confirm that, you have to wait for a pullback to an order block or to an imbalance, be it FVG, your fair value gap. So you wait for a pullback right there, and then you enter and you make massive profit right there. Okay, so let's look at that on a live chart. So let's look at this example right here. Now look at right here, we have a change of character. Price was initially bearish, right? And there's been a change of character at this point. Okay, so you can see the candle that broke that level is a large body candlestick and it closed above that zone. When that happened, it created an imbalance right here. It created an imbalance right here. You can see that there is a gap, right? There's a gap here, and price is coming to balance it. So for you to get an entry, haven't seen that price made an imbalance right here, all you have to do is come over here and place your entry. Okay, so you come over, you mark out the zone where there's an imbalance right there, and that is where you are going to set your entry. When you look at that, you can see the price retraced back into that level, and then you're going to go profitable. Can you see that? So that is how to use the change of character in getting your entry. Let's look at another example. Okay, so let's look at what happened in this scenario right here. So we can see that there was a break of structure. Can you see that? Okay, the break of structure, and price pulled back to the zone. Can you see that? Price pulled back and then went upward. So when is the time at which you are to enter? After checking, after confirming a change of character, okay, you saw the price broke the last lower high. Okay, what are you to do? Is to check around the zone if there is any imbalance. Okay, check for fair value gaps, other blocks. So you check for that and then you position your entry at that level. Can you see right here we have a gap right here, an imbalance, a fair value gap, and you can see the price came back to that zone to balance it up before moving. Okay, it came back to balance it up before moving. Can you see that? So that is how to use change of character and your break of structure to get your entries. So remember this simple rule. Break of structure means the trend continues, while change of character means the trend may reverse. Okay, so once you start reading market structure this way, you will stop chasing random entries and you will start trading with logic. Okay, now drop a comment on this. Do you use break of structure or a change of character more in your strategy? Which one do you use more? Do you use the break of structure to get your entries, that is trading along with the trend, or do you use the change of character, okay, confirming reversal? Which of them do you use more in your trade? Drop a comment in the comment section. Now like this video and subscribe for more smart money content and boom and crash tutorials. Thank you for watching.